Hello and welcome to another update video about Solana. I felt it would be helpful to provide another Solana update given the volatility we've seen today. For now, the price is respecting all the relevant parameters and it's reacted to support that I communicated yesterday. It's reacted to resistance as well, which I provided earlier today or yesterday, depending on your time zone. And we could now really be on our way down in this C wave. So I would say short-term price action aligns more closely with the yellow scenario. And it's important to recognize that we could be in this E wave down, but that the microstructure I am showing here as an ABC structure could surely extend further. I mean, this initial ABC can always turn into a larger ABC, because ABC, might be all of wave E of 4, but an ABC structure could also be just the larger A wave of an E wave. Then we get another larger B wave and then move down into the support area before we go higher. Essentially, therefore, we just have to see how the price does react to support, which is defined between $162.25 and $134.19. There is a more aggressively bullish scenario available. Obviously, we're tracking here the overall idea of an Elliott wave triangle. The thing is, this here looks a bit like a 5-wave move up. So calling this the D wave of a triangle is possible. There's just different different ways. We could talk about an A overshooting B wave to the downside, C wave up in wave D. In the end, it doesn't matter so much. What really matters is what are the bullish support levels, and they are defined between $162.25 and $134.19. Obviously, in the previous video, I shared with you that there is this accelerated bullish wave count, similar to the Bitcoin chart, but it would need to hold above 170.51 to keep it alive. Well, it's doing that, but it doesn't give us an indication that we actually have put a low in place. The invalidation point for the more accelerated, more direct bullish count here, 1, 2, 3, 4, 5. Invalidation point is not $170.51. That's just support. The invalidation point is the red line located at 165.70. From there, we could rally higher. But below 165.70, which might actually be the neckline for a head and shoulders pattern, we're likely dipping deeper into the yellow zone. Now, it's always difficult to say which one is the one that's in control. As I said to you just now in the video, for me, it seems like the yellow count seems in control. Price action aligns more closely with it. It is also what I highlighted as the more probable scenario, I think yesterday or a couple of days ago. Pointed it out in the videos, but also, I do share updates for our gold members on Discord. There was quite a lengthy update I provided a couple of days ago. And the idea was, let me just see, I would prefer the price to form a healthy E wave as per the yellow scenario before an upside breakout occurs. So I always say, don't care so much about my own preference. Yeah, maybe a bit of an educational moment here. The levels are objective, and I tend to have a preference for certain wave counts. Yeah, I mean, I do show you my preferred counts. Sometimes it's a bit of a misconception that people think, okay, if he shows 2 counts and the one that he doesn't prefer works out, the analysis doesn't work. Well, that's, of course, the wrong way of thinking about it, because the market could do anything, right? The market is free to do anything. So what we can do with Elliott wave is reduce that uncertainty and really boil all the movements down to maybe a couple of scenarios, right? Out of the infinity of movements, we can identify 2, maybe 3 scenarios. Typically, one of them works out. But, between these, sometimes, because they are already the preferred scenarios, in this case, we were looking at 2 bullish cases, one more directly bullish, one also bullish with a deeper pullback. Again, what happens if you, let's say, follow my preference, wait for a deep pullback, but it breaks out directly, there's no point, right? So the levels are objective. The levels can always prove me wrong. So I think it's important to understand just it's a math game, right? It's a math game. It's about reward and risk. So anyway, I think there's not anything else to say about this scenario. But remember the price movement on a couple of days ago. Price dipped into this micro support area, saw a bounce, reacted to resistance, is now coming down. So Solana is just playing nicely with these fib levels, following the parameters nicely, respecting the fibs, and next support is $170.51, which in the yellow count should break, and then $165.70. And I would actually expect it to reach that $162.25 level, because as I said, it's the preferred interpretation to have a healthy E wave. Now, we always need to be aware that after an initial ABC structure down, while a low could be in, that needs to be proven, we always need to be mindful a larger ABC structure could unfold. But there should, not will, but should be a reaction to that area here between 162.25 and 165.70. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.